Hey everyone, and welcome back to the channel. If you're in your 20s and the word investing sounds like a secret language spoken only by people in suits, trust me, you're not alone. For years, I thought it was this super complicated, risky game that you needed a ton of money to even play. But what if I told you that's completely wrong? What if I told you the easiest way to start investing is something you can set up in the time it takes to watch an episode of your favorite show? Today, we're cutting through all the noise and jargon to show you exactly how to get started on your investment journey, even if you're starting with just a few dollars. This isn't about getting rich overnight. It's about making smart, simple moves now that your future self will thank you for. So grab a coffee, get comfortable, and let's demystify investing once and for all. First things first, let's talk about why your 20s are the absolute golden age for investing. It all comes down to one magical concept: compound interest. Albert Einstein supposedly called it the eighth wonder of the world, and for good reason. Think of it like a snowball. When you start rolling a small snowball down a hill, it picks up more snow, getting bigger and bigger and rolling faster and faster. Compound interest is your money's snowball. The money you invest earns returns, and then those returns start earning their own returns. The longer your money has to roll down that hill, the bigger your snowball gets. When you're in your 20s, you have decades of hill ahead of you. A small amount invested today can grow into a surprisingly large sum by the time you're ready to retire, all thanks to time and compounding. This is your single biggest advantage, more powerful than having a huge starting sum later in life. So, where do you put this money to let it work its magic? Forget trying to pick the next big meme stock or timing the market. That's stressful, risky, and more like gambling than investing. The easiest, most recommended starting point for beginners is a low-cost index fund or an ETF, which stands for Exchange Traded Fund. Imagine you want to invest in the entire US stock market, like the top 500 companies. Instead of buying 500 individual stocks, which would be a nightmare, you can buy one share of an S&P 500 index fund. That one share gives you a tiny piece of all 500 companies. It's instant diversification. This means your risk is spread out. If one company has a bad day, it doesn't sink your whole portfolio because you have 499 others propping it up. It's the ultimate don't put all your eggs in one basket strategy, built right in. Now, you're probably thinking, okay, index funds sound cool, but how do I actually buy them? This is where it gets really simple. We're going to use something called a brokerage account. Think of a brokerage as a store for investments. You open an account, deposit money from your bank, and then use that money to buy things like stocks, bonds, and our new best friends, index funds. There are tons of fantastic, user-friendly brokerage apps out there like Fidelity, Vanguard, or Charles Schwab. Many of them have $0 minimums to open an account and offer commission-free trades, meaning it doesn't cost you anything to buy or sell. Opening an account is usually done entirely online and can take as little as 15 minutes. You'll just need some basic personal information, like your social security number and a bank account to link. It's genuinely as easy as signing up for a new social media app. Once your brokerage account is open and you've transferred some money into it, and remember, you can start with as little as 20, 50, or whatever you're comfortable with, it's time to make your first investment. Let's stick with our S&P 500 index fund example. You'll simply search for the fund's ticker symbol. Think of it as a nickname, like VOO for the Vanguard S&P 500 ETF or FXAIX for the Fidelity 500 Index Fund. Then you decide how much you want to invest. Click Buy, and congratulations! You are officially an investor. You are now a part owner of 500 of the largest companies in America. Take a moment to let that sink in. It's a huge step, but look how simple it was. You didn't need a financial advisor or a secret password. You just needed a plan and a little bit of action. But here's the real secret sauce, the step that turns this from a one-time action into a powerful wealth-building habit: automation. The most successful investors don't constantly watch the market or try to time their buys and sells. They use a strategy called dollar cost averaging, and you can automate it. All this means is investing a fixed amount of money at regular intervals, say $50 every 2 weeks, regardless of what the market is doing. Most brokerage apps allow you to set up automatic transfers and automatic investments. So every payday, that $50 can automatically move from your bank to your brokerage and buy more of your chosen index fund. This is incredibly powerful for two reasons. First, it takes emotion out of the equation. You want to panic sell when the market is down or get greedy when it is up. You just consistently invest. Second, when the market is down, your fixed dollar amount buys more shares. When it's up, it buys fewer. Over time, this can lower your average cost per share. It's a disciplined, hands-off approach that builds wealth steadily and quietly in the background. Now, let's talk about the type of account to use. For most people in their 20s starting out, a Roth IRA is one of the best tools available. An IRA is an individual retirement account, which is just a special type of brokerage account with huge tax advantages. With a Roth IRA, you invest money that you've already paid taxes on, your regular post-tax income. The magic happens later. All the growth and earnings your investments make over the decades are completely 100% tax-free when you withdraw them in retirement. Let me say that again. Tax-free growth. All that compound interest we talked about, that massive snowball you'll have in 40 years, you get to keep all of it without giving the government a cut. This is a massive, massive advantage. You can contribute up to a certain limit each year, and you can open a Roth IRA at the same brokerages we mentioned earlier. It's the perfect home for your new index fund strategy. I know some of you might be thinking, but I have student loans, or I'm trying to save for a down payment. That's real life, and it's important to balance these goals. Investing isn't an all-or-nothing game. It's about finding a balance that works for you. Maybe you start with just $25 a month. That's perfectly fine. The key is to start, to build the habit. That $25 a month over 40 years, with average market returns, can still grow into a significant amount. Don't let the pursuit of perfection stop you from making good progress. Start small, stay consistent, and as your income grows over your career, you can increase the amount you invest. The most important thing is getting your money in the game and letting time do the heavy lifting for you. So, let's recap the simple, step-by-step plan. Step 1. Open a brokerage account, preferably a Roth IRA with a low-cost provider. Step 2. Link your bank account and transfer an amount you're comfortable with. Step 3. Choose a low-cost, broad market index fund or ETF, like an S&P 500 fund. Step 4. Buy your first shares. Step 5. The most important one. Set up automatic, recurring investments to make it a consistent habit. That's it. That is the core strategy that has built wealth for millions of people. It's not flashy, it's not a get-rich-quick scheme, but it is proven, simple, and incredibly effective, especially when you start in your 20s. The journey to financial freedom is a marathon, not a sprint. The small, simple step you take today by opening an account and making your first automated investment is the most important one you'll ever take. You're setting your future self up for success and security. You're taking control of your financial destiny. Don't be intimidated. You can do this. The hardest part is simply starting, and now you have the exact blueprint to do it. Thank you so much for watching. I hope this broke down investing into manageable, actionable steps. If you found this helpful, please hit that like button and consider subscribing for more content on making personal finance simple. Let me know in the comments if you have any questions or if you've started your own investment journey. I'd love to hear about it. See you in the next video.